As an entrepreneur, as a startup founder, having built, scaled, and exited a SaaS business before, I often get asked by other startup founders, TK, if you were to start another SaaS business today, how would you go about it? On one of my last episodes, I walked through the 3 things that I would do before I even go about starting a SaaS business. On this episode, I'm going to walk you through how I would fund it. I'm going to walk you through the 3 strategies that are available to you and how to pick the right one. Intro. What's up, everybody? Welcome to another Unstoppable. I'm TK, author of the book, How to Punch the Sunday Jitters in the Face, entrepreneur, startup founder, and angel investor. On this channel, I help startup founders like you become unstoppable in your life and your business through belief and discipline. I drop an episode like this every single Sunday with the TK energy, so be sure to hit the subscribe button and the bell icon so that you get notified whenever I drop an episode. If you're a startup founder and you're trying to fund the growth of your SaaS business and you're trying to figure out what's the right route for you, on this video, I'm going to walk you through the 3 strategies that are available to you, and then I'm going to walk you through exactly how to pick the right one. And there are some non-obvious choices that are out there for you to consider. After having started a SaaS business, after having raised from the best of them, including Andreessen Horowitz, Founder Collective, Jackson Square Ventures, and more, here's everything that I've learned about how to fund your SaaS startup, how to pick the right source of funding, and how to go about growing it. I'm super excited to bring you these strategies. So if you're excited to dig in, be sure to smash that like button and let's get started. Oh, and also one more thing. Right after this episode, my next episode is gonna go deeper into the mechanics around the SaaS business. What are the key levers that you can turn to grow it faster? So if you're a SaaS founder, you might also wanna hit that subscribe button and that bell icon so you get notified. Here's how I'm gonna run this video. I'm gonna walk you through the 3 strategies that are available to you, and then I'm gonna help you understand how to actually pick between them. So number 1, the first way you can actually fund your SaaS business is by bootstrapping it. This is fairly obvious, but there's some nuances here. Maybe it's not obvious, I don't know. If you're bootstrapping the business, it means that you're paying for it yourself. You're not taking on outside capital. Maybe you're borrowing money. So really the way it works, and I've done this before, is you're funding it by putting it on your own personal credit cards. Maybe you're getting a second mortgage or taking personal debt, or you're borrowing money from friends and family. And there's a nuance here. I put non-tech investors under here as well. So often I see entrepreneurs going about and they live outside of Silicon Valley. They'll go to their local rich doctor or they'll go to this angel group and they'll try to raise money from them. And what ends up happening is they get deal terms that are completely non-standard. The one thing I'll tell you is you should either pick between a bootstrap model and keep it super clean and take it on as debt, or you should actually go with professional tech investors. Anything in between, you're gonna be stuck with really weird onerous terms and really weird requirements from investors that don't quite understand how a tech business is built and grown. So you should be really careful about that. That's why I put non-tech investors under the bootstrap bucket as well. The other nuance here is when you're bootstrapping a company, yes, you're taking on debt or you're borrowing money or whatever, or taking a portion of your income to invest into this business. You own 100% of it, no one else does. The other thing to remember is the way you're really gonna grow your startup is through profitability and customers. Meaning the more customers that you get, the more free cash flow you're gonna have, and the more money you'll have to play with to grow that business further. So really what that means is you really need to fund that initial part of that business to get it to generating cash. If you can get it to profitability, even at a very tiny scale, you'll own 100% of it and you'll actually have extra cash to fund that growth again. Which is why a lot of times people say it's a lifestyle business or they kind of dismiss it, but bootstrapping your company and bootstrapping your business is an incredibly powerful way to fund your company, especially if you think about the customers as a big source of funding as you get the machine going. The second way of going about it is venture capital. Now, venture capital has a lot of forms. This ecosystem is more thriving than ever. There's different kind of investors with different kind of incentives. Let me walk you through it. So at the highest level, there's a very specific definition of raising venture capital. Raising venture capital and venture capitalists are essentially, and I like this definition, I won't say where it's from for specific reasons, is they're heat-seeking, unicorn-chasing capital designed to build billion-dollar businesses in 5 to 7 years or go bust trying. Heat-seeking, unicorn-chasing capital designed to build billion-dollar businesses in 5 to 7 years, or go bust trying. And the way venture capitalists usually work, or this whole ecosystem works, is you start with getting some angel investors who are people that are part of this ecosystem, founders, like I'm an angel investor and they invest their own money. I'll write you a check for 10K, 25K. There's some angel investors, I'll write a 100K check or a 250K check. From angel investors, you then raise from early stage venture capitalists, early stage funds. They're professional investors, they have LPs. They'll invest out of their fund into your business and they'll write checks anywhere from 50K to $1 million, maybe more. And then from early stage, you go on to raising from proper venture capital firms. They'll write checks anywhere from $3 million to hundreds of millions of dollars. But all of them are designed for a very specific type of business. The very specific type of business is you want to build a really fast growth company in a really large space and go really fast and spend more money so you can go faster. And either you make it there in 5 to 7 years or you go bust. And that's part of the business model. The reason I say this is because most entrepreneurs, in fact, not all, and I struggled with this too when I was first starting out, you kind of just assume that venture capital is the route to go. I want to go start a SaaS business, therefore I should go raise money. And that's not really true. And that's why I always highlight the bootstrap route, which probably needs a better name, because what you're really doing is spending some money in the beginning to get it going, and then your customers fund your growth. Whereas in this case, venture capital will fund your growth. But the way they're going to fund your growth is that you have to go really fast in a really big market, and you're either going to massively fail or massively win, and they're okay with that, and you need to be okay with that as well. Those are the two, but you're probably saying, well, TK, you had a third. I do have a third. I'm going to walk you through it. So on one hand, you have bootstrapped. On the other hand, you have venture capital. And they seem like they're kind of extremes, right? It's either like borrow money from mom and her retirement and risk it, or go bust in 5 to 7 years or massively win and just go crazy. And it's like, well, there must be something in the middle. The ecosystem has been evolving. So fortunately for us, there is something in the middle and it's really cool. I happen to be a scout at indie.vc. Indie.vc is a slightly different model that they're approaching. And they're saying, look, you can go after this really, really large TAM, and you can really go after the angel round and then the seed round and the A and the B, and you can keep raising money every 12 to 24 months to fund that growth. And either you're gonna hit escape velocity in 5 to 7 years, or you're gonna go bust. You could do that, or you can try and bootstrap it your way and go really, really slow, and that's just the name of the game because you have to rely on free cash flow to actually generate so you can fund that growth. Or you could go after something in the middle. And something in the middle is they tend to focus on entrepreneurs who want to build profitable businesses, who want to grow and need capital to grow and are willing to give equity for it. However, they're purposefully choosing not to go the venture route right now. They're raising this money to actually drive for profitability. And they are going to raise this money and they write checks in varying sizes, and they're not going to take a board seat, but they will take equity. And you will raise that money, and then you will go back not to drive the blitz scaling growth that venture capital will want you to, but to drive to profitability, but faster. And you might say, all right, well, do I have to go after a really large market? And it's like, and that's where they're really nuanced, where you don't have to. There's a very specific theory where you can go after adjacent markets next to really large markets, which makes it where you can drive to profitability and then have the right to actually buy back whatever they bought from you in terms of equity, because you have free cash flow, and you can go raise another round. There's lots of nuances to indie.vc, and I'm happy to talk to you about it. But the beauty of this is you have bootstrapped on one end, a venture capital on the other end, and finally you have something in the middle, which is indie.vc. And I think there's actually more than just indie.vc doing this, but they're the best ones in the space, and I'm a scout for them. Full disclosure, I get paid when I refer someone into indie.vc, but the way I do it is if I get paid, I reinvest that into the investment that you're doing. So it's win-win for everyone involved. Those are the three strategies that you have. So number one is bootstrapped, number two is venture-backed, and number three in the middle is something like an indie.vc or other forms of alternative models that are starting to emerge. Now that you have the three different strategies that you can follow to actually fund the growth of your SaaS business, you might be wondering, well, TK, maybe the venture round is not perfect for me. Or you're saying, you know what, I definitely can't bootstrap this. My idea is too big, and that middle indie.vc one sounds too weird. I'm perfect for the venture-backed model. You may be starting to think about like which direction you actually want to go. So here's how I would think about it. I think about it in terms of this 2x2. On the bottom part of this 2x2 is scalability. On this side of the 2x2, you have total addressable market. So you can have a small TAM or a large TAM. You can have a really small total addressable market, or you can have a really large total addressable market. In terms of scalability, you can have low scalability, or you can have, and I hate the word, but it's fine. This is what we've all agreed on, blitz scaling capabilities, blitz scaling scalability. And what you really want to figure out is where your startup and where your idea really fits in this 2x2. If you are in a space where it's a really large TAM to go after, truly, and you actually have a business that can have high software margins, if you're in a business where you can actually scale really quickly, then VC might be the best route for you because that's the best type of business that VC is built for. If you happen to be in a super small TAM and you happen to have very low scalability, great examples of this is a restaurant or a services business where you actually have to hire more humans, it's not really software enabled, or it's very location specific. If it's like that, then bootstrapping and taking loans is probably the best way. The real nuances come when you are somewhere in the middle, where you have moderate amounts of scalability, but not obvious blitz scaling levels, and you have moderate levels of TAM, but it's promising. That's really when you're not really sure. Every VC conversation is going to be that much harder because they're going to be like, well, I don't know, maybe. And there's no way you can even enter that game unless you raise capital to grow and actually build and do the R&D. In those kind of cases, you're kind of stuck in the middle. And you really have to ask yourself, there's no obvious answer here. One way to do it is you have to keep pitching investors, keep pitching venture capitalists, because you have so much belief that this is actually a model where you can blitz scale and you can go after a really large TAM. In that scenario, you just have to get to one yes, one VC saying, yes, I will fund this, let's go give it a shot. And within 5 to 7 years, you're either gonna be wildly correct or you're not, and you're gonna have to deal with that. Or you might say, you know what, I don't know, but I bet I can build a profitable business in this space. And that puts you somewhere in the middle, where you actually want to build a profitable business. The TAM is significant, but not billions, hundreds of billions of dollars, in which case, looking at these alternative funding models, Indie.vc being one of them, but there are others, can be very, very viable. So what does this tell us? What this tells us is there's really two big vectors for you to think about. The first one is TAM. And by the way, if you really want to understand how to calculate a total addressable market, how to think about your total addressable market, how to create a strategy around the market you're going after, I did an entire video on this here, which you can check out, that helps you understand how to actually calculate your total addressable market, which is super important. The other vector is scalability. Scalability is this question of how scalable can this business be? How much is required to actually bring on more customers? Do you do a certain amount of work and then you can bring on an infinite number of customers? Or do you have to add a lot of cost for every customer you bring on? That's a core essential part of understanding the strategy and the growth strategy of your business. The biggest thing it really comes down to is how, for most SaaS businesses, which is software, is how easily and effectively can you acquire customers? How quickly can you onboard customers? And how often do they stick around? This part of building a SaaS business is probably one of the most important things. This is why I did an entire episode on how to build what I call an unstoppable sales funnel. An unstoppable sales funnel is a framework that I personally developed over the last 10 years of operating SaaS businesses. And it helps startup founders actually think about how to efficiently acquire customers. Because if you can efficiently acquire customers, everything becomes easier. And you actually have optionality on whether you bootstrap, you raise a little bit of money, or you raise a big round because you know you can put that money to work. So be sure to check out this video, which walks you through how to actually build out an unstoppable sales funnel so that you can actually scale your startup faster, probably with less money involved. One last thing, if by the end of this video, and as you look at this 2x2, you're like, you know what, TK, you've convinced me. I absolutely need to go raise venture capital. I did an entire video on a 6-slide pitch deck, a very specific format that you should follow, that I followed in the past to raise millions of dollars of venture capital. You can check that video out here on how to create a pitch deck. In this video, not only do I give you my 6 slides that you absolutely must have in your pitch deck, I also walk you through what goes through the inner narrative of the investor, of the venture capitalist as you are pitching them, so you can craft your story the right way based on what they're thinking about. So to summarize, if you are building a SaaS business today and you need to find a way to scale that business, to fund the growth of that business, you have 3 strategies available to you. Number 1 is you can continue to bootstrap it and use the customers to actually fund the growth. You can go venture capital, but it has specific strings attached. It has to be a very specific model. Or you can look at alternative forms that are emerging, like indie.vc. By the way, if you are interested in indie.vc, just email me, tk@getunstoppable.com, and I'm happy to tell you more about it. I'm happy to make an introduction. Or you can also go to indie.vc.com to learn more. Now, before we wrap, now you know the 3 strategies that you can use to grow your startup. But you may be wondering, well, how do I actually create an end-to-end growth strategy for my SaaS business? How do I actually figure out what my market is, what my product strategy is, what my go-to-market strategy is, so that I can figure out how much money I need to fund it, so that I can drive the growth? Luckily for you, I created a 5-point startup strategy guide. This guide walks you through my very specific framework on how to create a 1-page growth strategy for your startup. You can download the guide by following the link below. It's completely free, and it has all the information you need to create that 1-page growth strategy for your startup so you can excel your path to the next stage of growth. In conclusion, if you liked this video, please hit the like button. It will mean the world to me and my team. It'll help us spread our word. And I drop a video like this so that founders like you can have an unstoppable strategy for your life and your business through belief and discipline. So if you're interested in that, hit the subscribe button and the bell icon. I drop an episode like this every single Sunday with the TK energy. And lastly, if you're part of a SaaS founders group, if you're part of a mailing list, if you're part of a Slack channel, please share this video so that we can spread the word and educate more people and have a greater impact on the ecosystem that we're all in. So we can build incredible companies with an incredible community that we have of unstoppable startup founders. And lastly, remember, everyone needs a strategy for their life and their business. But when you are with us, yours is going to be unstoppable. I'm TK, and I'll see you next Sunday.